Hello, investors. I'm Stuart Kruse, and welcome to Unemployment Thursday. We were expecting 875,000 new unemployment claims, and we came in at a much better print, around 787,000 new claims. So that's great news, right? Well, market's down today, so market doesn't think it's such great news, and in spite of Tesla crushing its quarterly earnings, the market's down. Why is it down? Well, let's go to the charts here. We've seen this chart just about every single Thursday. We peaked out here at this close to 7 million unemployment claims in this 1 week, and we're down to 700,000. So that's got to be good, right? At 1/10 of what we were before, roughly. But again, if I go back to remind where we were at 2007, the peak of our unemployment claims, the new claims, was 650,000 during the financial crisis. That was the worst week ever. So we're still above the worst week ever. And if we add the continuing claims onto that story, continuing claims dropped from our close to 20 million down to just under 8 million. But again, at the peak, the continuing claims during the worst time of the financial crisis was at 6.3. So we're still ahead, significantly ahead of the worst levels of the financial crisis, where we thought we were in turmoil, and we were in turmoil. So that's obviously bad for the market. But what about what's good for the market? Well, home sales crushed the numbers. So I'm going to put up some home sales prices. These things are just on fire right now. So our existing month over month U.S. home sales up 9.36% month over month. So that if I'm going to put on our absolute value, the existing home sales, 6.5 million units sold when the average is somewhere in the 5.4 million range. So good 20% above the normal average rate. So these are some lofty numbers. Home sales are doing fantastic. And you might expect, if home sales are up and we're having more units sold, the inventory is way down. So I'm going to add inventory to the chart. Long-term average for inventory for existing is 1.77 units, and we have an inventory of 1.47, almost at a market low of inventory. This is a 5-year number. We can switch to 10. The story doesn't change. Inventory has been coming down, down, down. I'm going to clean up this chart a little bit to make it a little bit easier to see. So these are the inventory numbers coming down. And if inventory numbers are coming down, then that means the supply has got to be down. And we're at the lowest supply. Even though we're not the lowest inventory, we're at the lowest supply. And how can that be? Well, you can see inventory numbers usually kind of hit a bottom sometime in December. So this is right on the year, December, December, December. But we're not in December yet. So we shouldn't really even be at our low relative point of inventory, but we are. So what that means is that our monthly supply did hit our lowest point, 2.79 months worth of supply. And what does that all mean for the prices? Well, if you've got a high level of demand and low level of supply, that means prices are up. So the median home prices are up on top. We are at 311,000. This says 307. The latest print was 311,000, where the average home price was selling over the last 10 years for 228. Now that's not adjusted for inflation. So if we bring this back down to a 5-year window, you're looking at, let's say, 250,000, 255 for a median home price, and we're getting over 300,000 now. So this housing market is actually heating up, and maybe can't continue at this kind of breakneck pace. So you've got humongous numbers and great numbers in the housing market, but our unemployment numbers are way down. Retail sector is up, technology is up, manufacturing is way down. So this market is kind of a tale of two markets. So we're going to continue to watch this to see how it plays out. Right now, the stock market doesn't think these numbers are good enough. So we're down a little bit. That could be as a response to the fact that we haven't gotten a stimulus package from the government yet, but they're working on it. So that's us wrapping up the Unemployment Thursday with the U.S. existing home sales in there to boot. This is Stuart Kruse with Kruse Asset Management, telling you and reminding you to invest with the odds in your favor.